Just when some were eagerly calling a bottom in oil prices, not so fast. The International Energy Agency says the pricing structure might have fundamentally changed because of shale oil in the United States. Let's get more analysis and perspective from Vandana Hari of Platts. Thank you very much for coming in to talk to me. What do you think? The IEA, are they shedding fundamentally a different picture on what is actually going on in the oil and gas industry right now?
It is a completely new paradigm. If you look at the shale producers or the tight oil producers in the US, they are very different kind of companies, very different kind of geology that they're extracting from. The world is used to thinking about more the conventional oil. So all the yardsticks that we are using tend to be based on history. And sometimes I guess we forget that these companies, yes, they might be shutting down quickly. The oil rig count in the US has been dropping quite steeply for the past 9 weeks or so. Right. But something that we need to bear in mind is that once prices start moving up as a result of that, whether it's psychologically or because there's a real shutdown of production, not enough growth in production in the US, these companies will come back again. They're very nimble.
And that's why the IEA says that, in fact, the US shale industry will emerge even stronger once this pause and pullback actually passes. How do you read that? I mean, why? After all, lowest cost, highest cost shale producers, we're looking at a huge gap between 40 and about 120. Why aren't they already going belly up?
Absolutely. So long term, the conventional wisdom for several years had been that the marginal oil is the highest cost oil. Now, increasingly, we need to go into the frontier areas, the deep sea, and as a result, 120, 150 even might be the marginal cost of oil. And what the US shale phenomenon has done has completely upended this thinking. And when you look at the shale producers, even within those producers, as you quite rightly say, there's a whole range of production costs. And what we're starting to see, no doubt, they are feeling the pain. We see the signs of that. So apart from putting off investment, which we can talk about separately, what's happening with the drop in the US oil rig count is that the tight oil producers are sort of retreating to the more economically viable plays, which is why there's a whole lot of debate right now that how much does a drop in the rig count actually translate to in terms of a drop in production growth in the US? Nobody really knows that.
Right, and have we been relying too much on Saudi Arabia in light of the fact that maybe the Saudis don't really control the market anymore? You have so much supply coming on board. And then the IEA also interestingly points out people are forgetting about an expanding Iran that continues to produce more.
Yes. So the whole role of OPEC, or the absence of OPEC's traditional role in this day and age, to my mind is quite understandable, because it's an acknowledgement by the Saudis and by the OPEC that we are all in a different world now. There was a time when any excess supply could be addressed by OPEC curbing production. But as they've said time and again, this excess supply has been caused not so much by OPEC. I mean, it's been pretty much sticking to its target, just overshooting a little bit, its 30 million barrel per day target, but more by the US producers. So their argument has been, why should we hurt ourselves? Why should we curb our production, lose our market share, only to benefit the US producers? That's understandable.
Right. So the battle of wills continues between the Saudis, OPEC, and their OPEC friends, plus the U.S. shale producers. On another, and you throw in the supply dynamics. Some say because of the oil contango phenomenon, you actually have millions and millions of supply that's inland, onshore, offshore. Whenever price picks up, that's going to flood the market. Therefore, the prices continue to get depressed. Do you agree with that perspective?
Yes, that's quite likely as well. So what the oversupply has done right now is it has, first of all, the land storages are brimming. And when that happens, and there's still oversupply, they're by some accounts close to even 1.5 million barrels per day of excess supply over demand currently. the oil has to move somewhere, right? So it's starting to go into what's called floating storage. Essentially, you time charter a super tanker, a VLCC, and try and extract profit from the contango in the market.
Right.
So you buy at the current cheap prices, and you lock in a forward price, which is much higher.
What you said pretty much sums up some of the comments made by two oil and gas executives we had interviewed earlier. Vandana, very nice to hear your thoughts, and thank you very much.